Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell from Group 1 Trading. Well, the VIX has been relatively slow all through this week, not so today. We've seen a lot of action thus far today, almost 200,000 contracts trading, which is probably equal to our total this week up until today, Monday, Tuesday, and Wednesday. The big trade we're seeing is in December. Now today is pretty much the fourth consecutive day of this rally. The S&P 500 is pulling close to its highs of a couple weeks ago, and the VIX is really moving downward. The VIX front month future October broke through 25 today, and the cash is down around 24. We are really seeing some momentum to this rally. Today, that big trade was in December, and in that trade we saw 120,000 VIX contracts go up. This is the same trade that one customer has done in October when it was about 2 months away from expiration, and November when it was about 2 months away from expiration. They bought 80,000 December 40 calls to sell 20,000 December 22.5, 27 strangles. Now for that position they collected 70 cents, and their payoffs is a little bit odd here. If they sit right here in between 22.5 and 27.5, well, they collect that 70 cents. They have a little bit of room on either side, but basically below 22 and above 28 the trade starts to become a loser, and it really has a lot of room to be a loser between 28 and 43. Now above 43, it's beyond break even, and they really start to collect on those 80,000 upside calls. And the thinking in the crowd is that that's what makes the trade really attractive to the customer. In the event that we get that the market rolls over and we move above 40, they're long 4 of those upside calls and start making money on that position pretty quick. For example, if we go to 70 and 80 where we were last December, this would be a huge winner for the customer. So it seems that this customer is willing to give up a little bit of risk between that 28 and 43 range in exchange for a ton of upside calls. We're not sure why the customer would want this position, but perhaps they have some exposure elsewhere in their portfolio that would get hurt in the case of a crash scenario, and they'd like this position to help it. Beyond that, we've had a ton of upside calls trading in October. We talked about as the VIX goes down, those calls get cheaper and more attractive to a lot of people to buy. So those get bid up even as we come down. The 30s, the 32s, the 27.5s, all of those have been trading in heavy volume today. That's what we have going here. A lot of action. Jamie Tyrrell with Group 1 Option Monster.